Ladies and gentlemen, welcome back to the channel. AMC stock was down about 7% today. Some major events happened, including the FOMC Minutes, as well as Nvidia Earnings. We're going to go over those things here in this video. We have a little bit more clarity. We do have a big catalyst coming tomorrow morning that is really going to make or break, in my opinion, the rest of this week, which is going to be tomorrow. And then on Friday, markets are closed on Thursday. So we have a lot to get into in a very short amount of time. Hit that like button, subscribe to the channel, and let me know what you guys think about this down below in the comment section. So AMC stock, this is not good, guys. You closed under $7 per share. I've said it very clearly. If you break under your prior low that was set on September 11th, 2023 as $7.05 per share, the stock is probably going back down to $5 per share. In the $5 range. You're probably going to pretty quickly blow through $6 per share. You kind of are today as well. This 7% drop was a loss of 51 cents. You hit a low of the day at $6.52. You're currently at $6.65. So another really bad day or two, and you're going to be in the fives, and that's probably what is coming next. Now, I'm not a financial advisor. I'm not a financial planner. There are reasons to suspect that we could see a rally in AMC stock just because you've fallen so much, but that's really one of those narratives that may or may not play out. I've said it very clearly. Under $7 per share, you probably go to $5 per share. I'm not going to change up on that now. I still think that is probably what is going to happen, but there is a decent argument to be made that AMC stock has fallen way too much, way too quickly, and the stock should probably see a bounce here at these current levels. And that is always a possibility, but not something I would necessarily bet on nor trade on. If you look at things like the RSI at 29.51, you're under 30. That is one of those situations where it's so bad it's almost seen as good news. Last time we were under 30 on the RSI, the stock did fall a little bit more, and it was under 30 on the RSI for a while. It actually hit a low of about 21 on the RSI, which is very, very oversold. But you did end up rallying from $7.05 per share to $11 plus per share. So I think at some point that rally will happen. But really, I just think Aron needs to be fired at this point. I think that would do a lot more good to AMC rather than not, instead of sacrificing AMC shareholder equity when it's really unnecessary, when you have $750 million of cash in the bank and rates are going lower. We already know rates are going lower in 2024. The business is now profitable for 2 quarters in a row. I mean, do you really need to urgently dilute shareholders when it looks like a broader macro rally is coming? Probably not. Aron has no concept of stocks, a stock price, or managing investor relations in the slightest bit. And that is a big problem when it comes down to a stock that has the ability to raise capital that maybe doesn't need to. Wall Street was looking at AMC like, you don't need to raise capital. That's why it took so many people for such a big shocker when AMC did announce they're going to raise capital. We just had great earnings. The writer-actor strike just ended. Rates were going lower. Financing, capital in the bond market, is starting to look a little bit more attractive. And they just take whatever opportunity they have to dilute shareholders. Anytime the stock goes up at all. Now, I think a little bit of good news, whether or not Aron does stay in a management role in AMC, I think the markets are telling Aron, you cannot continue to dilute shareholders. And that's a big problem here for the foreseeable future, even as rates go lower here today. Rates on the 10-year Treasury are dropping another almost 3 basis points down to 4.395%. So getting closer to 4% than even back to 5%. Now, Nvidia stock is actually down about 1% here in after hours. They lost about 1% leading into their earnings. Nvidia crushed it yet again. Nvidia's revenue tripled as AI chip boom continues. Nvidia's results surpassed analyst projections for revenue and income in the fiscal fourth quarter. Demand for Nvidia's graphics processing units has been exceeding supply thanks to the rise of general artificial intelligence. Nvidia announced the GH200 GPU during the quarter. Now, earnings came in at $4.02 per share versus $3.37 per share, which were expected. Revenue at $18.12 billion versus $16.18 billion, which was expected. So a beat on revenue of almost $2 billion. That's like, I mean, it's getting to be a smaller number since the overall pie is looking, you know, bigger. This is roughly about a 15% beat on revenue, which what you were seeing before was like much larger percentage wise. But EPS did kill it as well. Now, Nvidia made one comment about China, and that's what sent the stock down lower. Now, I think as I said before, Nvidia was in an interesting position where you had already priced in a lot of good news. You could see that in the options market. Calls were going for a very large amount and puts were not. Nobody was really betting Nvidia was going to fall. And I don't think betting on Nvidia falling is a good investment strategy by any means, but that sets you up in a position where Nvidia would have had to come out with some crazy off-the-wall numbers like 25 billion in revenue, guidance for 30 billion next quarter, some astronomically stupid numbers to see the stock go up another 25% or so, because you've already baked in a lot of good news with this story. And that is why we did buy some puts in the trading community. I was very clear in that community, and I've been very clear in general here on YouTube. I did not plan to hold those trades, so I did not. Those contracts went up about 20%, not as much as I was hoping for. I was hoping for about 50%. I did sell out of those. I bought a different contract, essentially just rolled the trade over and held profits for free. Now, that's never financial advice. I did think Nvidia would fall, even with really, really good earnings. And that is, unfortunately, what is happening. Now, I don't think this is all too big of a deal in this marketplace as of right now. You can see some stocks like an Apple is slightly down in after hours. Tesla's slightly down in after hours as well. But it's not the make or break it dynamic of our markets that, you know, investors are paying attention to anymore. AI is really on the back burner if you compare that to rates and to Fed policy. Now, the FOMC minutes came out today, and the Fed gave no indication of possible rate cuts at the last meeting, according to the minutes. They say in discussing the policy outlook, participants continue to judge that it was critical that the stance of monetary policy be kept sufficiently restrictive to return inflation to the committee's 2% objective over time, the minutes said. Along with that, however, the minutes showed that some members believe they can move, quote, proceed carefully and make decisions on the totality of incoming information and its implications for the economic outlook, as well as the balance of risks. It says, traders in the Fed funds futures market are indicating virtually no probability that policymakers will increase rates again in this cycle, and in fact are pricing in cuts starting in May. Ultimately, the market expects the Fed will enact the equivalent of 4 quarter percentage point cuts before the end of 2024. So that's basically like 1% of rate cuts. But that can change very quickly. So the minutes were kind of a non-event as well. It was really in line with, you know, what we were expecting. It says, as for current policy, members said it was restrictive and was putting downward pressure on economic activity and inflation. So that's, that's good. You did not see Fed futures, start to price in any more additional, rate hikes or anything like that. The odds of rate cuts actually did go a little bit higher as well. So all in all, it was net positive. That's why you did see 10-year treasury yields drop about 2.5%. And I think overall, when you look at Nvidia's earnings, when you look at the minutes, that's all great. That's all fine. I think the rally can continue in the broader markets with that information. The big question, guys, is durable goods orders month over month. This comes out tomorrow. You're expecting negative 3.1%. If this comes in like way negative, that's a problem, because this is directly correlated to GDP as well. So investors right now are expecting around 1% GDP for Q4. If durable goods orders come in, let's say negative 5%, negative 6%, negative 7%, investors will start to say, hey, are we going into a recession? Like, is that happening right now? That's a problem. We want to see weak economic data, but we don't want to see a recession. There's a big difference there. Weak economic data might look like negative 2% on durable goods orders, maybe in line with the estimate, around negative 3.1%. I think anything worse than negative 3.1%, or call it just round up to negative 3.5%, negative 4%, anything like negative 5%, negative 6%, negative 7%, or worse, is going to come in as very bad news. Now, Durable goods orders excluding transportation month over month. This one could be potentially even more important than, well, I guess that is month over month as well. But when you exclude transportation, you're expecting 0.1%. If this were to come in really negative, that would be a problem. And it's actually interesting because durable goods orders, this is month over month. You're expecting negative 3.1%. But durable goods orders excluding transportation month over month, you're actually expecting that to be slightly positive. So even a slight negative read there might actually be good news. As well, so something to be encouraged about potentially coming tomorrow. And then Wednesday's the last real trading day in quotes or parentheses, because Thursday, stocks are going to be closed, bonds are going to be closed. And then on Friday, stocks are going to trade, but bonds are going to be closed. So we're not going to have a lot of insight to what yields are actually doing. I believe futures might be open to like noon, but that is obviously something I'll have to clarify overall. So that's your outlook for the day today. Again, the bad news with AMC stock today, if you missed it, B. Riley Securities, Eric Wohl did bring down his estimates quite a bit for 2023, 2024, and 2025 domestic box office projections, citing the Hollywood strikes really first and foremost. The 2024 expectations went down a lot from 9.61 billion to 8.60 billion. So went down about $1 billion. That's more than 10%. That is not exactly great. And Eric Wohl tends to be more bullish than some of your other analysts. So that was really not seen as good news at all. Now, let's take a look at some of the short interest data here, and then we'll go ahead and wrap up this video, let you guys get on with your day and hopefully enjoy it. You have a short interest of free float at 9.1%, $128.81 million worth of short positions. Currently, days to cover 0.76. 17.99 million shares that are currently sold short. Shares out on loan 13.38 million. Cost to borrow 1.4%. Utilization of 30.83%, and a short score of about 54 out of 100. So nothing that's too exciting here. The option activity, like we said yesterday, was egregiously high, just ridiculously high. Who knows? I think some of that was obviously due to the SEC rule that is going into effect. The SEC might be starting to, along with FINRA, starting to collect some data and start trying to aggregate that data to shine a light on short selling. We've talked about that before. That should be coming into effect towards the end of November. And there was probably a rush to hide some of those short positions. That wouldn't surprise me because today, I mean, you're seeing two orders totaling $106,000 with a positive order value of 0%. So it wasn't impressive at all today compared to what you've seen yesterday. And then basically all of the other data looks pretty much the same. So I don't want to rehash the same information necessarily that we went over in the last video. Long story short, Fed minutes, really a non-event. Nvidia, really a non-event. Keep in mind, last earnings for Nvidia was up 10%, and then it ended up selling off and closed basically break even on the day. If Nvidia is down 1% right now, you never know what's going to happen once you open for trading coming tomorrow. And it is a possibility that Nvidia could sell off big tomorrow or even rocket higher big tomorrow. That is a possibility as well. So go ahead and keep that in mind, guys. That's going to do it for this video. I got to go tend to him. I'm a little bit under the weather. So thank you guys for being here. This video maybe a little rougher around the edges. Hit the like button, subscribe to the channel, share this video with a buddy, a friend, a pal if you have not done so already. But most importantly, enjoy the rest of your day, and I will see you in the next one.